Hi, welcome to our channel of IGNOU Audiobooks, Indira Gandhi National Open University, School of Management Studies, SOMS, Bachelor of Commerce with major in Financial and Cost Accounting, B.Com, FCA, Block-1 Fundamentals of Export Business, AED-1 Export Procedures and Documentation, Unit-2 Export Policy Framework.
0 Objectives. After studying this unit, you should be able to explain the basic significance and objectives of India's export-import policy, describe the rationale of export trade control, explain the procedure of obtaining export license, explain the highlights of the EXIM policy 1997 to 2002, describe various provisions regarding exports and imports. 2.1 Introduction. In a developing country like India, trade policy is one of the many economic instruments which is used to suit the requirements of economic growth. The twin objectives of India's trade policy have been to promote exports and to restrict the level of imports to the level of foreign exchange available to the government. The basic problem of a country like India happens to be non-availability or acute shortage of crucial inputs like industrial raw materials, capital goods and technology. The bottleneck can be removed only by imports. In the short run, import can be financed through foreign aid, borrowings, etc., but in the long run, imports must be financed by additional export earnings. The basic objective of the trade policy, therefore, revolves around the instruments and techniques of export promotion and import management. In this unit, you will learn the objectives of export-import policy, the significance of export trade control and the procedure of export license. Highlights of the EXIM policy 1997 to 2002 will also be explained. Further, the detailed provisions regarding exports and imports will be discussed at length. 2.2 Objectives of export-import policy. Government control import of non-essential items through an import policy. At the same time, all-out efforts are made to promote exports. Thus, there are two aspects of trade policy: the import policy, which is concerned with regulation and management of imports, and the export policy, which is concerned with exports, not only promotion but also regulation. The main objective of the government policy is to promote exports to the maximum extent. Exports should be promoted in such a manner that the economy of the country is not affected by unregulated exports of items specially needed within the country. Export control is, therefore, exercised in respect of a limited number of items whose supply position demands that their exports should be regulated in the larger interests of the country. In other words, the policy aims at I. Promoting exports and augmenting foreign exchange earnings, and e. Regulating exports wherever it is necessary for the purposes of either avoid-d-ng competition among the Indian exporters or ensuring domestic availability of essential items of mass consumption at reasonable prices. The Government of India announced sweeping changes in the trade policy during the year 1991. As a result, the new export-import policy came into force from 1 April 1992. This was an important step towards the economic reforms of India. In order to bring stability and continuity, the policy was made for the duration of 5 years. In this policy, import was liberalized and export promotion measures were strengthened. The steps were also taken to boost the domestic industrial production. The major aspects of the export-import policy 1992 to 97 include introduction of the duty-free export promotion capital goods (EPCG) scheme, strengthening of the advance licensing system, waiving of the condition on export proceeds realization, rationalization of schemes related to export-oriented units and units in the export processing zones. The thrust area of this policy was to liberalize imports and boost exports. The need for further liberalization of imports and promotion of exports was felt, and the government of LNDLA announced the new Export-Import Policy, 1997 to 2002. This policy has FMCA simplified the procedures and reduced the interface between exporters and the Director General of Foreign Trade, DGFT, by reducing the number of documents required for export by half. Import has been further liberalized and efforts have been made to promote exports. The new IGNOU Policy 1997 to 2002 aims at consolidating the gains made so far, restructuring the schemes to achieve further liberalization and increased transparency in the changed trade environment. It focuses on the strengthening the domestic industrial growth and exports and enabling higher level of employment with due recognition of the key role played by the SSI sector. It recognizes the fact that there is no substitute for growth which creates jobs and generates income. Such trade activities also help in stimulating expansion and diversification of production in the country. The principal objectives of Export-Import Policy 1997 to 2002 are to accelerate the country's transition to a globally oriented vibrant economy with a view to derive maximum benefits from expanding global market opportunities. To enhance the technological strength and efficiency of Indian agriculture, industry and services, thereby improving their competitive strength while generating new employment. The objectives will be achieved through the coordinated efforts of all the departments of the government in general and the Ministry of Commerce and the Directorate General of Foreign Trade and its network of regional offices in particular. Further, it will be achieved with a shared vision and commitment and in the best spirit of facilitation in the interest of export. 2.3 Export Trade Control and Licensing Procedures. Export is considered as an engine of economic growth. Government make all-out efforts to promote exports. At the same time, the export of essential commodities need to be regulated by the government in the interest of the country. Let us FMT discuss the regulatory provisions of Export Trade Control. 2.3.1 Export Trade Control. Exports may be made freely except to the extent they are regulated by the provisions of Import-Export Policy 1997 to 2002 or any other law for the time being in force. Government continuously make effort to promote exports by providing various assistance and facilities. At the same time, control is exercised on exports of such commodities and services which are vital to the economy. The primary object of the government is to promote exports to the maximum extent but in such a manner that the economy of the country is not affected by unregulated exports of items essentially needed within the country. Hence, export control is exercised to a very limited extent in respect of minimum number of items. India's foreign trade, exports and imports, is regulated under the provisions of the Foreign Trade, Development and Regulation Act, 1992 and Foreign Trade, Regulation, Rules, 1993. This act provides for the development and regulation of foreign trade by facilitating imports into and augmenting exports FRQM India. Besides, exports are also regulated by the following major acts: 1. Ancient Monument Preservation Act, 1904, 2. Indian Coffee Act, 1942, 3. Tea Act, 1953, 4. Foreign Exchange Regulation Act, 1973, 5. Coir Industry Act, 1942, 6. Dangerous Drugs, Import, Export and Transshipment Rules. 1957 7. ANS Act, 1959, and ANS Rules, 1962, 8. Antiquities and Art Treasures Act, 1972, 9. Dangerous Drugs Act, 1953, 10. Indian Post Office Act, 1898, 11. Drug and Magic Remedies, Objectionable Advertisements, Act 1954, 12. Motor Vehicle International Circular Rules, 13. Wildlife Protection Act, gold can be exported with the sanction of Reserve Bank of India. Exports of a few products are canalized through specified agencies like STC, MMTC, etc. Despite various laws and regulations relating to exports, the restrictions or regulation on exports has been minimum. The new Export-Import Policy, 1997 to 2002 has further liberalized the list of items under export control. Negative list contains only a few items which are banned or prohibited. Presently there are 10 items in the negative list. There are 32 items subject to licensing and 6 items are canalized for export. The items in the negative lists may vary from time to time. Besides, exports of some items are permitted with minimum regulation and without license. 2.3.2 Export Licensing. As you know that all goods may be exported without any restriction except to the extent such exports are regulated by the negative list of exports. The negative lists consist of goods, the import or export of which is prohibited, restricted through licensing or otherwise or canalized. The negative list of exports is divided into the parts which are as follows. Part I. Prohibited items. These items cannot be exported or imported. These items include wildlife, exotic birds, wild flora, beef, human skeletons, tallow, fat and oils of any animal origin excluding fish oil, wood and wood products in the form of logs, timber, stumps, roots, barks, chips, powder, flakes, dust, pulp and charcoal. Part 2. Restricted items. Any goods, the export or import of which is restricted through licensing, may be exported or imported only in accordance with a license issued in this behalf. Part 3. Canalized items. Any goods, the import or export of which is canalized, may be imported or exported by the canalizing agency specified in the negative lists. The Director General of Foreign Trade may, however, grant a license to any other person to import or export canalized goods, hence, barring a few items which are totally prohibited for exports. Other items in the export-OTC framework negative lists can be exported under a license or through a designated agency or under specified conditions. Procedure to obtain export license. An application for grant of export license in respect of items mentioned in the EXIN policy may be made in the prescribed form to the Director General of Foreign Trade or its regional licensing authority. The application shall be accompanied by the documents prescribed therein. THC Export Licensing Committee at the Headquarters may consider such applications on merits for issue of export licenses. A special high-powered licensing committee shall consider applications for the export of dual-purpose chemicals and for special materials, equipments and technologies as specified in the policy. The procedures for making an application for other items are described below. 1. An application for export of canalized items may be made to the canalizing agency, conceived in accordance with the procedure prescribed by such agency. 2. An application for the export of samples or exhibits in excess of the ceiling may be made to the Director General of Foreign Trade. 3. An application for export of items included in the negative list of exports, excluding prohibited items, for projects abroad undertaken by an Indian contractor or subcontractor or consultancy organization may be made to the Director General of Foreign Trade. The application is accompanied by a copy of the project approval by the concerned authority. The project approval provides the details of quantities, specifications and value of the individual items required to be exported. 4. The application for export of gifts, indigenous or imported spares and replacement goods in excess of the ceiling or period prescribed may be made to the Director General of Foreign Trade. Applications for export licenses are to be made on prescribed forms. There is no application fee on export licenses permits. An export license shall ordinarily be issued with a validity period of 12 months or such shorter period as the licensing authority may specify. The license may be revalidated on merits for such period as the licensing authority may deem fit. 2.3.3 Other provisions. Importer-Exporter Code Number. No export or import shall be made by any person without an Importer-Exporter Code (IEC) number unless specifically exempted. An application for grant of IEC number shall be made by the registrarate head office of the applicant to the concerned licensing authority. The licensing authority shall issue an IEC number in the prescribed format. RBI code number. This code number is a requirement under the Foreign Exchange Regulation Act (FERA). For obtaining the code number, the firm has to apply to the Divisional Office of the Reserve Bank having jurisdiction over the area where the firm is located. There is a prescribed form of application for this purpose, which is to be submitted in duplicate along with the report from the bank where the firm has opened a current account. The firm is also required to furnish the permanent income tax account number. If the application is in order, the Reserve Bank will allot the RBI code number. This code number is permanent and there is no need to renew it. Registration membership certificate. Any person applying for a license to import or export or for any other benefit or concession under this policy shall be required to furnish registration membership certificate (RCMC). RCMC may be obtained from any one of the Export Promotion Council's Commodity Board's special agencies relating to his main line of business. Compliance with laws. Every exporter or importer shall comply with the provisions of the Foreign Trade, Development and Regulation Act 1992. They will comply with the provisions of this Act and the terms and conditions of any license granted to them, as well as provisions of any other law for the time being in force. 2.4 Highlights of EXIM Policy 1997 to 2002. The new EXIM Policy 1997 to 2002 aims at giving a major thrust to accelerate law of India's exports through restructuring and revamping of various export promotion schemes. The procedures have been simplified and streamlined with a view to making them more transparent and easy to administer. TNE policy aims at continuing the tackle reforms and trade liberalization with a view to achieving a higher rate of export growth. The policy encourages the industry to enhance its competitiveness in the global market and to achieve its full potential in the areas of its strength. The major changes are 1. Simplification of schemes. Significant changes have been made to reduce the multiplicity of various export promotion schemes and to improve the attractiveness of such schemes. In order to facilitate easy access to inputs required for export production, the new policy has only two schemes. They are Advance Sensing Scheme and Duty Entitlement Pass Book DEPB Scheme. 2. Liberalization of imports. Restricted items have been further liberalized for imports. 3. EPCG scheme under the Export Promotion. Capital Goods Scheme EPCG scheme duty on capital goods has been reduced from 15% to 10%. Under the Zero Duty EPCG scheme, the threshold limit for zero duty imports has been reduced from 20 crores rupees to 5 crores rupees for agricultural and allied sectors. Special in tilde press license facility is being extended to domestic capital goods suppliers for supply under the Zero Duty EPCG scheme. 4. Gold and Jewelry Scheme to promote export of gold and jewelry, the number of nominated agencies permitted to stock gold has been increased. Earlier it was done by MMT, STC, SBI, etc. Under the Gems and Jewelry Replenishment (RP) scheme, third-party exports have been allowed so that small exporters are able to sell their products in the international markets. They can claim rep licenses based on disclaimer certificate from the third party. Bulk license for import of rough diamonds has been further liberalized. Further, EOU, EPZ units in the gems and jewelry sector are being permitted to sell 10% of THC-R output in the DTA on payment of duty. 5. Agricultural sector efforts have been made to boost agro-export. The changes in this sector include allowed import of EQU prints of 5 crores rupees and above under Zero Duty EPCG scheme. 2. Double weightage will be given for agro-export in calculating eligibility of export, house, trading house, etc. On total value of exports, 1% additional special import license will be given if export of fruits, vegetables, floriculture and horticulture produce products constitute 10% or more of the total export s. 3. UEDs units will be permitted to sell 50% of their output in the DTA on payment of duty without stipulation of any value addition conditions. 5. Software. In order to promote the export of software, following facilities have been provided to this sector. Software units can undertake exports using data communication (LLNK) in the form of physical exports through the courier service also. Software units have been permitted online data communication (I) for DTA sales. 2. Software units can use the computer system for commercial training as well. 3. Software units can also import goods on loan from client for a specified period. 7. Deemed exports facilities have been extended to oil and gas sectors in addition to power sector. In a bid to encourage domestic sourcing of inputs, domestic manufacturers supplying against EPCG licenses will be entitled now for deemed export drawback facility. In case of supply to Zero Duty EPCCI license holder, the domestic supplier will be entitled to import raw materials duty-free under the Special Impressed license. 8. Special incentives for export of SSI produce products from northeastern states, new markets. Following facilities have been provided for export of SSI produce from northeastern states, WEW markets. Additional special import license of 1% on total value of exports will be given to export house trading houses, etc., where such export of products from north eastern states constitute 10% or more of the total exports. 2. Double weightage on such exports is being given for recognition as AET-STH, SSTI.1. 3. Additional SIL will be given for exploration of new markets. 4. SIL on export of SSI products has been increased from 1% to 2%. 9. Export housey trading houses. The trading housey superstar trading House existing eligibility criterion for recognition of equity WSTWSSTH based on average annual export performance of preceding 3 license years was 10 rupees crore, 50 crores, 250 crores and 750 crores. This has been revised to 20 crores rupees, 100 crores, 500 crores and 1500 crores respectively. It has been targeted to contribute nearly 60% of the country's total exports by youth by the turn of the century. 10. Incentive to improve quality of *X*oat products. The SIL entitlement of exporters holding IS-0 9000 series or ISO 9000 series has been increased from 2% of FOB to 5% of FOB. 2.5 General provisions regarding exports and imports. As you know that the policy aims at promoting the exports and liberalizing the imports. Let us first study the general provisions regarding exports and imports. Exports and imports free unless regulated. Exports and imports shall be free except to the extent they are regulated by the provisions of this policy or any other law for the time being in force. The goods may be exported or imported from India to any country of the world except Fiji and Iraq. The central government may, in public interest, regulate the import or export of goods by means of a negative list of imports or a negative list of exports, as the case may be. Compliance with laws. Every exporter or importer shall comply with the provisions of the Foreign Trade, Development and Regulation Act 1.992. They are supposed to comply with the rules and orders made under this Act, the provisions of this policy and the terms and conditions of any license granted to them. The provisions of any other law for the time being in force are also to be complied with. If any question or doubt arises in respect of the interpretation of any provision contained in this policy, it shall be referred to the Director General 1 of Foreign Trade, whose decision thereon shall be final and binding. Trade with neighboring countries. The Director General of Foreign Trade may issue, from time to time, such instructions or frame such schemes as may be required to promote trade and strengthen economic ties with neighboring countries. Trade with Russia. Eurider Debt Repayment Agreement. In case of trade with Russia under the Debt Repayment Agreement, the Director General of Foreign Trade may issue, from time to time, such instructions or frame such schemes as may be required. Transit Facility. Transit of goods through India from or to countries adjacent to India shall be regulated in accordance with the treaty between India and those countries. After studying the general provisions, let us now come to the specific provision. First, we shall be studying the provisions related to exports. 2.5.1 Exports. As you know, the government make best efforts to promote export. Hence, the provisions related to exports have been simplified. More facilities have been granted to exporters. Let us now discuss them in detail. Free exports. All goods may be exported without any restriction except to the extent such exports are regulated by the negative list of exports or any other provision of this policy or any other law for the time being in force. The Director General of Foreign Trade may permit export of goods without a license under certain terms and conditions. SUCH terms and conditions may include minimum export price, MEP, registration with specified authorities, quantitative ceilings and compliance with other laws, rules, regulations, etc. Denomination of export contracts. All export contracts and invoices shall be denominated in freely convertible currency and export proceeds shall be realized in freely convertible currency. Contracts for which payments are received through the Asian Clearing Union (ACU) shall be denominated in ACU dollar. The central government may relax this provision in appropriate cases. Realization of export proceeds. If an exporter does not realize the export proceeds within the time specified by the Reserve Bank of India, he shall be liable to action in accordance with the provisions of the Act. The rules and orders made thereunder and the provisions of this policy will be applicable. Export of gifts, goods export policy framework including edible items of value not exceeding 15,000 rupees in a licensing year may be exported as a gift. However, items in the negative list of exports shall not be exported as a gift without a license, except in the case of edible items. Export of spares, warranty spares, whether indigenous or imported. Of plant, equipment, machinery, automobiles or any other goods may be exported up to 7.5% of the FOB value of the exports of such goods. This can be exported along with the main equipment or subsequently but within the contracted warranty period of such goods. Export of passenger baggage, bona fide personal baggage may be exported along with the passenger. It may also be exported within 1 year before or after the passenger's departure from India. However, items in the negative list of exports shall require a license, except in the case of edible items. Export of imported goods. Goods imported may be exported in the same or substantially the same form, without a license provided they are not under the negative lists. Export of such goods imported against payment in freely convertible currency would be permitted against payment in freely convertible currency. However, if such goods are exported against payment in Indian rupees, they shall be subject to a minimum value addition of 100%. This can be done provided the item to be exported is not in the negative lists. Goods including those in the negative lists may be imported for export in freely convertible currency without a license subject to the following conditions. There is a minimum value addition of 10%. 2. The goods shall be imported under customs bond. 3. Import and subsequent export of the goods shall be made from the same customs bonded premises. And 4. Such goods shall not be taken outside the customs bonded premises. Export of replacement goods, goods or parts thereof on being exported and found defective, damaged or otherwise unfit for use may be replaced free of charge by the exporter. Export of repaired goods, goods or parts thereof on being exported and found defective, damaged or otherwise unfit for use may be imported for repair and subsequent re-export. Such goods shall be allowed clearance without a license and in accordance with customs notification issued in this behalf. Special import license benefits. The Director General of Foreign Trade may specify a class or category of export products or exporters who shall be eligible for special import license, subject to such conditions as may be specified. The special import licenses shall be freely transferable and shall be valid for import of items as prescribed in the policy. The imports under special import license shall be subject to normal customs duties. Deemed exports, it refers to those transactions in which the goods supplied do not leave the country and the payment for such goods are made in India. The supply of goods shall be regarded as deemed exports provided the goods are manufactured in India. The categories of supply include supply of goods against duty-free licenses issued under the duty exemption scheme, supply of goods to export-oriented units, export processing zones, software, technology parks, electronic hardware technology parks, etc. Supply of capital goods to holders of licenses under the Export Promotion Capital Goods Scheme, subject to eligible benefits, supply of goods to projects financed by multilateral or bilateral agency funds as notified by the Ministry of Finance. Supply of goods to any project or purpose in respect of which the Ministry of Finance permits the import of such goods at zero customs duty. Supply of goods to power, oil and gas sectors in case of notification duly approved by Ministry of, and supply of goods qualifying as deemed exports. Special IN. Sent license advance intermediate license 2. Deemed ergots drawbacks kennel 3. Refund of terminal excise duty and 2.5.2 imports. You have learnt the provisions related to export at length. As you know, import plays an important role in the economic development of the country. In order to manufacture the commodities of international standards, sophisticated technologies and capital goods are required. This can be procured by importing them. Hence, imports have been further liberalized. The major provisions regarding imports are as follows: free importability, capital goods, raw materials, intermediates, components, consumables, spares, parts, accessories, instruments and other goods may be imported without any restriction. It may be unported except to the extent such imports are regulated by the negative list of import or any other provision of this policy or any other law for the time being in force. The above goods may be imported by any person whether he is an actual user or not. However, if such imports require a license, the actual user alone may import such goods unless the actual user condition is specifically dispensed with by the licensing authority. Second-hand goods. All second-hand goods, other than capital goods, may be imported in accordance with a public notice or a license issued in this behalf. Import of second-hand capital goods. All second-hand capital goods having a minimum residual life of 5 years may be imported by actual users without a license. This is subject to actual user condition and in accordance with the laid down procedure. Import of gifts. Import of gifts shall be allowed in accordance with the provision of baggage rules as amended from time to time. Import of gifts shall be permitted without a custom clearance permit where such goods are otherwise freely importable under this policy. In other cases, a custom clearance permit shall be required. It may be issued on application by the licensing authority on merits. Import of passengers' baggage, bona fide household goods and personal effects may be imported as part of a passenger's baggage. Samples of such items that are otherwise freely importable under this policy may also be imported as part of a passenger's baggage without a license. Import on export basis. New or second-hand jigs, fixtures, dies, molds, patterns, press, tools and lasts, construction machinery and other equipments and containers meant for packing of goods for export may be imported on export basis without a license. This may be imported on execution of bond BWK guarantee to the satisfaction of the customs authorities. Reimport of goods repaired abroad, capital goods, aircraft including their components, spare parts and accessories, whether imported or indigenous, may be sent abroad for repairs, testing, quality improvement or upgradation of technology are reimported without a license. Import of machinery and equipment used in projects abroad. After completion of the projects abroad, project contractors may import, without a license, used construction, equipment, machinery, related spares up to 15% of the CIF value of such machinery, tools and accessories. This can be done on the basis of furnishing of evidence of purchase for and use in the overseas project. Used office equipment and vehicles may also be imported after completion of the projects abroad without a license provided that they have been used for at least 1 year. Sale on high seas. Sale of goods on high seas for importation into India may be made, subject to this policy or .any other law for the time being in force. Export Promotion Capital Goods Scheme. Capital goods, both new and second-hand, may be imported under the Export Promotion Capital Goods (EPCG) scheme. The import of second-hand capital goods under the scheme shall be subject to such conditions as prescribed in the policy. Computer systems may also be imported under the EPCG scheme. Capital goods including spares up to 20% of the CIF value of the capital goods may be imported at a concessional rate of customs duty subject to an export obligation to be fulfilled over a period of time. Under EPCG scheme, capital goods for the manufacture of goods and for providing services can be imported at Aero duty or 10% duty against an obligation to export 4 times of CIF value over 5 years and 6 times of CIF value over 8 years respectively. Import of capital goods for farm sector may be allowed at 0 duty against obligation to export 6 times the CIF value on FOB basis over 6 years if the import of capital goods is of 5 crores rupees or more. Duty Exemption Scheme. The duty exemption scheme consists of duty-free license and duty entitlement passbook. Duty-free license includes advance license, advance intermediate license and special impressed license. Import of raw materials, intermediates, components, consumables, parts, accessories, mandatory spares, not exceeding 5% of the CIF value of the duty-free license, and packing material may be permitted against a duty-free license. Under the Duty Entitlement Passbook Scheme, DEPB, an exporter shall be eligible to claim credit as a specified percentage of FOB value of exports made in freely convertible currency. DEP shall be valid for a period of 12 months, and third-party exports are also admissible for grant of credit. 2.6 Let us some UP government policy for exports aim at promoting exports to the maximum extent to earn foreign exchange. At the same time, control is exercised on exports of such commodities and services which are vital to the economy. The thrust area of new export-import policy has been to boost exports and liberalize imports. The new EXIM policy 1997 to 2002 has given major thrust to acceleration of India's exports through restructuring and revamping of VDIS, export promotion schemes. The procedures have been simplified and streamlined. The policy aims at continuing the process of trade liberalization. It encourages the industry to enhance its competitiveness in the global market. Highlights of EXIM policy 1997 to 2002 reflects the recent changes in the EXIM policy. Exports and imports are made free, except to the extent they are regulated by the provisions of the policy or any other law for the time being in force. Various PL provisions of exports like denomination of exports contracts, realization of export proceeds, export of gifts, spares, passenger baggage, imported goods, replacement goods, repaired goods, special import license benefits, and provisions of deemed exports have been discussed at great length. The major provisions regarding imports as discussed in the text include free importability, import of second-hand goods, second-hand capital goods, gifts, passengers' baggage, import on export basis, re-import of goods repaired abroad, import of machinery and equipment used in projects abroad. Sale on high seas, exports promotion capital goods scheme and duty exemption scheme. Thank you for watching. We will see you in the next video with next chapter.